Thank you for joining us. You've tuned into Arirang's Within the Frame. I'm Han Da-eun in Seoul. Everything rally is the talk of the town these days, as almost every asset class, including stocks, gold, and Bitcoin, have hit new record highs. Bitcoin reached an all-time high in its 15-year history, while gold prices also extended their rallies to records. Nasdaq and S&P 500 also soared to record highs at the end of last week. What's behind this record-setting ascent, and how long will the bullish upward trend last? For some clues to these questions and more, we're now joined by Kim Sei-wan, professor of economics at Ewha Womans University. Thank you, Professor Kim, for joining us.
Thank you for having me today.
Also with us this evening is Kim Hwa-gyun, professor of banking and finance at Texas A&M University. It's a pleasure to have you with us.
Pleasure to meet you too.
Professor Hwa-gyun, let's start with you. Bitcoin broke the 100 million won mark during trading this afternoon, hitting the highest level in its 15-year history. That's more than fourfold compared to 2022. What's driving the surge?
As we know by now, Bitcoin is a highly speculative asset, and therefore its price depends a lot on the expectations of the investors regarding the size of future optimistic investor pools. So this means that if the market anticipates a larger group of optimistic investors are likely to invest in Bitcoin, then prices will go up as demand increases. And of course, the opposite also is true. In this regard, I think that Bitcoin and in general, like crypto assets, have some major positive news recently. And basically this big, the finance players in the US have been investing in Bitcoins because the approval of the several the spot Bitcoin ETFs. So this means that the investor pool is going to be expanded to a new platform where most of the regular investors actually can start investing in. And I think that's the biggest news. And according to the BlackRock and the Fidelity, their sales seem to be going really well. So that means the proof of this, the regular investors also, and also optimistic investors started investing in Bitcoins. And as we know, also the Bitcoin has the limited supply and the kind of halving, which means the reduction in supply is going to come sometime soon. So I think that's also, I think, just spurring the helping to the Bitcoin price increases.
So several factors that made investors optimistic drove up Bitcoin prices, and some of the examples that you listed include U.S. approval of Bitcoin ETFs or exchange traded fund, as well as the upcoming halving cycle, which we will discuss more in our next question. So staying with you, Professor Hwa-gyun, most analysts aren't surprised by this rebound. Bitcoin has long risen and fallen in volatile cycles, but they're split about what its price surge means for the future. What are your projections, given that Bitcoin's 4-year halving cycle is due to return next month?
So, I mean, there's no such thing as for sure thing, but we know that in the past, 2022, the Bitcoin prices dropped by almost 80% or something. And then I think it started back again. And we saw this again in 2019 and also in earlier periods. So clearly, as I just explained about the nature of this highly speculative assets, we will see highly volatile price increases and decreases, because at the end of the day, this Bitcoin has no really fundamental, the assets backing up, except for these expectations and also the limited supply. So in that regard, I think if we kind of see somewhat from the past of this experience, there's a high chance that for the next month or two, prices can go up to 100K or maybe a little higher or a little lower. And then once the the investors start realizing their gains, and then if this triggers that this market actually start thinking, okay, maybe the future pool's going to decrease, then I think we can see some precipitous drop again in prices until we see some, extra regulation or other news actually coming up. So I expect for the next 1 or 2 months, we will see some, the persistent price increase and big up and down movement again going down.
Professor Hwa-gyun, correct me if I'm wrong for our listeners who may not be so familiar with the term halving cycle. It refers to an event where after every 210,000 blocks that Bitcoin miners add to the blockchain, the number of Bitcoins they receive as a reward is halved. And this is a built-in feature of Bitcoin effectively designed to control inflation. And what you're saying is that ahead of this expected halving cycle next month, prices may go up, perhaps hit the $100,000 range, or we could also expect some big drops as well. Actually, JP Morgan has anticipated that Bitcoin prices may drop by over 40% sometime after April. So we are expected to see some big fluctuations. Now to you, Professor Se-wan. Gold prices also surged to a record high last week. Is Federal Reserve Chair Jerome Powell's indications of potential rate cuts the biggest factor that led to the surge?
Right. The gold price in the spot market exceeded $2,100 per ounce, which increased over 5% in a week. And the majority of market participants expect gold price will continue to rise up to $2,300 per ounce in the next 6 months. Basically, there are two competing safe assets in the financial markets, US dollars and gold. And as US Fed's rate cut is highly expected in Chairman Powell's speech at Congress recently, which leads to weaker US dollars. Investors are more likely to demand on gold. There are also political interpretation on the rise of gold price. As we talked about, gold is a hedge against the risk. And increasingly, we see more uncertainties around the US presidential election in November. For example, if Donald Trump wins in the election in November, there will be further support for the safe haven asset from volatility around the ongoing wars in Ukraine and Gaza. This would provide a major positive for gold.
So when there's news of possible interest rate cut, that their dollars tend to weaken, which actually drives up the prices of gold in opposite. And you've also mentioned a bit about the geopolitical tensions as well as the upcoming U.S. elections that may drive investors to turn to safer assets. Now, again, to you, Professor Se-wan, safe haven gold and riskier companion Bitcoin have both climbed to fresh record highs. Isn't this a rare trend? What's behind the bullish rally of both the safe and risky assets?
It looks that the contemporaneous rises of gold and Bitcoin recently is something unexpected phenomenon. We know that Bitcoin is a risky asset like stocks. If we take a look at the data, S&P 500 return and Bitcoin return are highly correlated over time. So according to market's experience before, Bitcoin should be moving in opposite direction against gold. And this is exactly what we saw over the COVID period. As Professor Hwa-gyun explained well, there were more than 80% drop in the price of Bitcoin, while gold price is pretty much stabilized. But recently, the price of gold was influenced by geopolitical factors and the Federal Reserve interest rate cut forecast. Since the outbreak of the Ukraine war in 2022, central banks of emerging countries such as China and India actively purchased gold. That drove up gold price. And in the case of Bitcoin, the approval of listing of ETF investing in Bitcoin by US in January this year and the upcoming halving in April, which will reduce the issuance of the volume by half, are acting as positive factors for Bitcoin.
So it has been commonly known that the safe havens like gold and riskier assets like Bitcoin, they move in the opposite directions. And you cited the pandemic era For instance, in early 2020, the prices of gold soared to nearly $2,000, while Bitcoin prices were slashed by more than half, or 80%, as you mentioned. But it looks like that rule no longer applies due to various factors that Professor Kim just listed, which include the geopolitical risks, which drove emerging nations active purchase of gold, which drove up the prices. And there's also the U.S. rate cut and also U.S. approval of Bitcoin ETFs as well. So a wide spectrum of factors there that drove up the gold prices. Now, Professor Hwa-gyun, going back to Powell, he told House lawmakers last week that interest rate cuts are likely at some point this year. While markets expect rate cuts to come around June, what's your forecast?
Well, I think I mostly agree with the view, and probably the best predictor is, I just sometimes mention, the Fed futures show the very good sort of the prediction about the chance of the Fed funds rate actually going up or down. At this stage for the July, I think definitely the interest rate is going to be cut. And the chance of the going to get down, I think, is over 90%. So I think clearly July, I would say, at this stage, is almost like a sure shot, because less than 9% of the chance to staying put in terms of the Fed funds rate. In June, I think about 80% chance, or slightly lower than that. So still about more than 20% of the chance that the Fed funds rate is going to stay in the same region of like 525 to 550. So I would say in June, yes, it's very likely, but still a non-trivial chance that it's not going to go down depending on the economic situation. In July meeting, I think there's a very high chance that the rate is going to get cut. And in December, I think, probably it's going to go down by almost like a 1% or something.
So you project a U.S. rate cut to begin in June, and you're betting more than 90% on that. Analysts say U.S. Fed will cut rates by 1/4 of a percentage point 3 times this year. What do you say to that?
It's again, the Fed is going to keep looking at like how likely the inflation or the economic activity is going to get to the level that they want, like for instance, like inflation 2% and things like that. So they just keep looking at the data, and they're not going to change the interest rate that widely unless the economic activity slow down really fast. And I think according to, again, the Fed futures, looks like around like December 2024, that they think that the highest the chance of like around 50% is going to be around like 450, 475, or like 450 level. So from like the 525 to 550, it's about 1/4 to 1% point decrease. So I think that's what market expects, that the inflation probably reaches around like 2% goal, I think.
All right. Nasdaq and S&P 500 also soared to record highs last week. Some experts say there are solid reasons for the everything rally, while others worry the bubble will pop. What's your take?
Right. It's somewhat also related to the Professor Sei-wan's actually point. So almost everything, like including Bitcoin, gold, and everything seems to go up. And there are some common factors, for instance, like this, as we just talked about, interest rate is going to go down, like in the probably next quarter or two, definitely in 3 quarters. So that actually makes the liquidity conditions improve. Therefore, the money is going to be more easily, moving around, and that actually increases the high hopes about like, the future asset markets, and people start buying up early. That could be common factor. Having said that, I think the Nasdaq and the current S&P 500, the big high mark, I think is more related to the AIs and some of the themes that actually we can see from like NVIDIA stock or like Microsoft and these kind of things who invested heavily in AI. So this is the theme, but then clearly depending on their productivity and then the performance, I think there's a still non-trivial chance that it's going to go down very quickly. So in case of the stock market, depending on how well the overall economy is going to continue, and also this AI sort of like the future performance, how successful it's going to be within like 2-3 quarters, or if there's some disappointing news about this AI, maybe there's some ethical issues, or it's not as fast as it's going to just develop as we just originally expected. If that's the case, then I think the price can go down very quickly. So there's a chance that also like bubble is going to pop.
Well, NVIDIA really is the poster child in stock markets these days, isn't it? Now to you, Professor Sei-wan. Analysts expect Korea's benchmark Kospi to reach the 3,000 mark this year. How do you see Kospi playing out?
Well, that is a tough question because there's no way to forecast future stock market exactly. But broadly speaking, I see this year's stock market in a negative way. Korean government recently outlined the framework for highly anticipated value program aiming at resolving the country's chronic undervaluation of stock prices, which is called as Korea discount. The program urges private corporations to improve the transparency of their governance structure and shareholders' return policies without legal obligations to take part in the program. But on the day of announcement of this program by government, Kospi drops seriously due to disappointment by domestic investors. And it is expected that this year's Korean economic growth would be only 2% level on year. This is not a positive sign altogether for Korean stock market. But we have also good news too for domestic market. Like U.S. Fed is expected to cut its interest rates later, and Bank of Korea would be cutting its rate almost at the same time. Then domestic market will rebound temporarily against its drop from 2021.
So no one has the crystal ball here, so we don't know for sure, but you are a bit negative about how Kospi will play out, and you also mentioned a little bit about how Korea's Value Up program rather disappointed investors, which further led to a drop in Kospi. Now, the 2024 U.S. presidential election will be a rematch of Biden versus Trump. What does their rematch mean for markets? U.S. presidential election provides huge uncertainties to global financial market, even long before the election, even today. If Mr. Biden is reelected, we will face almost the same economic and political environment like today. But if Mr. Trump is reelected and he enforces, for example, United States to take hands up from the war in Ukraine and in Gaza, geopolitical risks would be maximized. And it has a power to drop the global stock market seriously. Further than that, it would drive up international oil price and agricultural products prices again, which leads to another inflation shocks. Since Korea is one of the most foreign-dependent countries in the whole world, one of the largest victims of this shock of uncertainty would be Korean economy. But at the same time, we can have new economic opportunities and business opportunities with Mr. Trump's government as he escalates, for example, tensions with China. These days, Chinese firms are catching up Korean firms very quickly. So that Mr. Trump's sanctions against the Chinese economy can provide new business opportunities for Korean firms. Right. There's a couple of huge issues at hand, making key issues in the election. There's taxes. Huge set of tax cuts are due to expire in 2025. There's also, as you mentioned, the tariff issue, whether the U.S. will impose more tariffs on imports. So I guess the Korean economy, as well as many other parts of the world, are bracing for a possible red wave alert for Trump's possible comeback. So we'll have to see how it plays out. And the South Korean government will need a decisive strategy of its own to prepare for whether a red wave or a blue wave. All right, thank you so much, both of you, for sharing your perspectives this evening.
Thank you very much.
Thank you.
And that brings us to the end of the show. Thank you for watching, and be sure to tune in same time tomorrow to join our conversation. Goodbye for now.